And on expected lines, we have a bit of a downtick on the key indices. The SGX Nifty was indicating that, but on the BSE 100, there are some gains that have come in. Actually, very muted performance is really out there. Asian Paints is down, HPCL is down, so oil and gas too is having a bit of an off day. But let's get in an important market voice. Vikas Khemani, CEO Edelweiss Securities, joins us right now on the show to talk about his sense of what we could be doing in the near and the intermediate term. Vikas, good having you. Thanks so much for joining in. You know, we just spoke to Adrian Lim in the morning. I don't know if you got a chance to hear him or no, but he was saying that while the markets have come off, they have not still reached a zone where he would call India as valuable and would go out and buy India. What's your sense?
Now, I respect every fund manager's view. Everybody has his own view, and that's what makes a market. I do believe that, and I'm not sure what levels he's looking at, but I do believe that India is in a fair value zone, and if you look at long-term averages, we are around the median valuation range, which, given the kind of profile our country is right now, I mean, kind of macro setup we have, kind of expected growth we have, and mind you, we are trading at this valuation at the bottom of the earnings cycle. So while valuation on an absolute basis might look expensive, but this earning cycle is kind of at its low. So when the earning cycle picks up, the acceleration will be much faster than I think most people expect. So I do believe that one has to look at valuation in context of that. And post I think Modi government took over last year, I think probably this is another brilliant time this correction has offered to get exposure into Indian equities. I do not know what will happen in the shorter term. Anything sort of could pan out, but I do believe that if you overlook next 6 to 8 months, from a medium term perspective, markets offer a great opportunity to buy at this point in time.
Because but the core concerns are I think evident, and core concerns are real, whether it is earnings slowdown or a lack of pickup in the economic activity. So do you think for the moment Indian markets could easily go through a process or period of transition?
Because absolutely, I think there's no denial on that the activity pickup is slower than expected, at least expected by the market, and I think there's no denial that it might take still some more time, given the fact that I think the government's approach is to address the problems in a structural manner, in a steady manner, in a long-lasting manner than the quick fix. So I do believe that probably the ground level activity pickup might still take some more time. But that's where the opportunity is, that because I think when the growth picks up, that will be a lot more sustainable, a lot more long-lasting. And while what will happen in this period, given the fact that we are in the middle of a global uncertainty, I think a lot of issues, uncertainties on the global fronts are there. So those kind of things definitely can create a havoc, as it created recently in Indian markets. So those kind of things are possible. That's the reason I said that if you have, medium term to long, if you can overlook next 6 to 8 months, I do believe the numbers will start picking up. People will see the real, movement on the ground, and that will be a big opportunity to make money in the equity markets.
Stay with us. So much more to chat about with you, but I'm going to quickly hop across to our technical experts as well and get in some trading strategies going. Mitesh, what's on your list for our viewers today?
See, I have a few more buy calls. The first one is a buy on ITC with a stop at 328 for targets of 342. A buy on Kotak Bank with a stop at 1344 for targets of 1405. And a buy on Page Industries, which made a fresh closing high after a big consolidation. That's a buy with a stop below 14,270 for targets of around 15,500.
Okay, let me also recap what Ashwini Gujral as well as Sandeep Wagle too are recommending in trade. And Ashwini has got a buy call on JB Chemicals, Dr. Reddy's, Eros International Media as well is a buy strategy from him right now. And Gujarat Pipavav too, that is a buy call. Gabriel India, Yes Bank, these are all intraday buy strategies. Sandeep Wagle then, he's got an intraday buy on Z Entertainment. CR2 is an intraday buy from him. Delta Corp as well, a buy strategy there. He's got a buy on GHCL, and Siemens too is an intraday buy call from Sandeep Wagle.
Okay, just before we get into today's top recommendations, a word on the stock that has moved quite a bit. And Ashwini Gujral, before you give in your top idea, a quick word on L&T Finance Holdings, which has gained 3.5% in the pre-open rates. Would you buy it?
See, the stock has been, basically range bound between 60 and 90. I would buy it, only above 90 when, something fresh is happening. Till then, it's pretty sideways and consolidation.
Okay, let's try and nail it down to that one top trading idea for the day. Just about a minute and a half left for the markets to start. So Ashwini, I'll come back to you only. What is your top trading call for the day?
See, Rose Media is a buy with a stop of 427, target of 452.
Okay. Mitesh Thakkar, what about you? Your top call for the day?
It's Page Industries. That's a buy with a stop at 14,270 for targets closer to about 15,500.
Any strategy on the Bank Nifty or the Nifty from the options standpoint?
Well, I have a future strategy which can easily be translated to options. Today we are going to gap down. So around this 8340, 8350 zone, if you buy the Nifty with a 40-point type of stop around 8300, I think the market could resolve on the upside towards 8450. Similarly, Bank Nifty, if you get a decline towards 18,350, 360, around those levels with a 100-point type of stop, I think the Bank Nifty could finally move towards 18,600.
Gentlemen, stay with us, but 60 seconds left, and just before that I want to revisit an important voice, which is Adrian Lim on his India outlook. And Adrian is of the view that we've reduced India weightage on back of MET uncertainty, high valuations, and the tax environment does not give enough clarity and confidence to foreign investors. They will put incremental money into Indian markets only and only if Indian markets or valuations, if they correct by 5 to 10%. So the tone from one of the biggest institutional investor in Indian equities is not bearish, but it is certainly cautious, and they are not really ready to commit money to India.
And extremely relative to China is what he said. He said, if India corrects right now 5 to 10% and China remains as is only then, and yeah, Matt, he said, he says if it continues to be a lingering issue, they may even pull out more money.
He's been very vocal about it. He's been very vocal about it, that the MAT issue has really got the current administration a lot of PR. They're trying to mend things, so hopefully we will have a solution in sight. Meanwhile, markets and the first rates this Tuesday morning are 22 points down for the Nifty, 24 points down for the Nifty now. So it's a flat start with the downward bias, but no need to complain. Markets in last 3 days have also recovered quite a bit. So 8350 is where I think some give and take is happening. Now let's look at the absolute Nifty gainers, and then we'll talk about the Nifty losers. Let's start with first the Nifty losers actually, because the bias clearly seems to be on the downside. It's a quietest start with a downward bias for IT. It's a flat start for private banks. And it's okay start at least for some of the higher flyers like JN Irrigation. Asian Paints reacting to brokerage reports. ICICI Bank 313 rupees, and JN Irrigation, which was looking mighty excited yesterday, even though delivery based buying was very poor, it stands at 65 rupees. I want to quickly mark Lupin and then look at Eicher Motors, because they have been two big high flyers, and Lupin as we speak is at 1700, followed by Eicher Motors, which stands it's up now. So it's a volatile move for Eicher Motors, but in general it's a quiet start with a downward bias on expected lines. Aisha, that is what SGX was indicating.
The FIPB is going to meet on 28th and consider some 48 FDI proposals. Those of Torrent Pharma, Strides, Eros, Biocons, Syngene, these are going to be up for discussion. Some of these names are looking pretty active. Torrent, of course, had been running yesterday as well. So L&T Finance, wherein some PE majors, Bain Capital, Bearing, they're eyeing a sizable stake. Watch out for this one as well. And then, of course, some of the smaller names which have come out with their earnings. So JBM Moto, wherein the PAT is coming lower by 15%. HSIL, good numbers there. The net profit is surged 35.5%. MM Forgings, etc. are names.
Just one quick word on Just Dial. There's a block deal, and 5.4% of the equity is changed hands. So it's a large deal that has happened on Just Dial. 38 lakh shares, which is quite large. 5.4% of equity anyways is large. Should pull up Just Dial for you. The intraday It's not reacted too much, but that's a large equity that has changed hands in Just Dial. So do watch out for this one as well. 5.4 is fairly big, yes.
I mean, Goldman Sachs has been buying into Just Dial, and one of the P investors has been exiting. So I don't know if this is an extension of that deal. But some of the P guys who invested in some of these internet companies and some of these so-called new age companies, they're looking at cashing out now. Makes sense, because they entered into Just Dial when Just Dial was not even listed.
Yeah. Well, maybe they'll rethink if the stock touches 1500 at some point of time. But let's mark some of the other stocks as well. Sterlite Tech, after that little bit of a disappointment because of demerger. So it came off from the highs of the day in today's session. Sterlite Tech is up 3%, good volume. So do watch out for that one. There is some price volume action in NCC, came off quite rapidly yesterday, but up today. Actually, Hero MotoCorp from the index has gained 2%, so that's made a good move too. I'm looking at the CNX 500 stocks. And Page Industries, I think it was a recommendation this morning, now at fresh highs, 14,932, so almost at 15,000 for itself. Page, Jubilant, iShare, these are those large ticket stocks which have corrected post their numbers and have come back quite smartly. So these are a few names to watch out for as well. But we are in conversation with Vikas Khemani. He is waiting by. Incidentally, Sterlite Tech is now 6% higher, so good going there. Vikas, with a basic construct that we are still in a bull market, the leaders don't change within the bull market typically. The leader of this bull market till now has been pharma without a doubt. And the stocks have come off quite meaningfully from the highs, 10, 15, 20% as the case may be in select large caps as well, the likes of Lupin, Sun Pharma, etc. What do you do with these names, be it large cap pharma or mid cap pharma? Do you find favor there?
So certainly, I think there is a large sector of institutional investor which has been positive on pharma, and we also are positive on pharma, given the fact that there is a huge growth potential still there in times to come, and also secondly, both in the domestic as well as the international market, and also our outlook on the currency is also slightly from 2 to 3% of depreciation every year. So if you put these two factors together, both pharma as a segment looks very, very interesting. Undoubtedly, they are a bit expensive given the fact that a lot of over ownership is there in that. So to that extent, you might see somewhat underperformance which we saw recently. But otherwise, I think structurally there are very good businesses. Some of the large companies like Sun Pharma, Lupin, I mean Dr. Reddy's, they have done phenomenally well. They have grown businesses structurally, and we see they will continue to grow in times to come. So we are quite positive in the segment overall.
So Vikas, what else is looking interesting in the market right now? Where would you look to add positions, and would your portfolio be largely towards the blue chip names, or is it mid caps which are looking more attractive considering they've fallen the most right now?
I think as Neil was saying that we are in a structural bull market, and these kind of corrections are a great opportunity to buy in structural bull market, and this bull market, according to me, would be led by economically oriented sectors. As and when we start seeing pickup in the growth, you will see sectors which are leveraged to the economic growth of the country will do very well, and banking and financial services stands at the top of that. According to me, that segment will do very well, and given the size of that segment, where you can deploy a large amount of money, will create huge amount of wealth for the investor. And that is where I think if you see international investors are also very, very comfortable putting in money. So I think that segment I see overall doing very, very well over the next 3 to 5 years. We will see compounding at play in that segment. Another segment which I have spoken in the past as well, that as we know that lot of amount of investments are going to happen in the various segments of the economy, led by capital expenditure in roads, ports, manufacturing, across the board. And I think there will be lots of opportunities in the capital goods EPC space. Again, you will see over the next 3 to 5 years a lot of compounding stories out there. I think right now everybody has made an hypothesis. We are into consolidation phase. As and when we start seeing a lot more ground level pickup in the growth, order book building out, credit picking up, you will see these segments delivering much better growth than otherwise defensive which have delivered so far. So I would believe that one has to remain fairly exposed to these segments. Secondly, you mentioned about mid cap. There's no doubt on that. In a bull market, mid caps tend to outperform the larger cap stocks, and because I think they tend to also grow faster given their base, and new business model gets created, and we will see in this bull market a lot of new business models get created, a lot of segments which never existed. You will start seeing large opportunities getting created, like in defense, in railways, and I mean as a lot of spend happens in these segments, you will see newer ideas coming about, newer mid caps getting created. So I think undoubtedly that segment will offer significantly better return. So one has to obviously identify right names, right stocks. All it has associated risk, but I think it has definitely better risk profile. So in this correction, many mid cap stocks which are good quality have corrected 30-40%. So I do believe that that segment offers great opportunity for investors to buy.
That's a very generic statement that mid-cap stocks, they offer a lot of value and you have to buy the right stocks. That's the classic definition I learned in my MBA
I know
college.
where you're getting.
Our viewers want something more from you.
Unfortunately, he
I know that's Nikunj, so I know where you're getting.
Come on, give me a theme, give me an idea. I respect your compliance, but give me something
because
which is actionable.
I'll make it easier. Last year, Edelweiss was the stock and the multi-bagger. Don't talk about Edelweiss, but our brokerage stocks looking interesting.
No, I think so. I must say that I've spoken segments like, I think in defense there are a lot of companies coming about. They are looking very, very promising. In some segments like chemicals, a lot of companies are looking. I mean, we have coverage on companies like SRF, companies like So I think there are a lot of companies in the chemical segment, in textile segment, in industrial segments like SKF Bearing. We have coverage on all those names. So we think that mid cap side good quality companies are looking very attractive. They've corrected significantly, and I think mid cap is such a large segment that you could sort of go on and on. And I know Nikunj wants sort of some names, but I do believe that if you look at, I mean, we cover almost about 100 mid cap stocks. Most of them are good quality. So depending on how investors want to look at, but I do believe that good quality companies in mid cap space will do very, very well. Some of the themes I mentioned: defense, railways, EPC, in chemicals, in textiles, will do very well.
Vikas, what we are doing this week is Modi 365. We're talking about all that the government has done, and we're playing out the key themes that this government or this Sarkar has done. 3 or 4 things from a stock market perspective which stand out. I mean, we could talk about Swachh Bharat and all, but I'm not getting into that. There is defense, there is railways, and there is Make in India. 3 big things that have come out. And then, of course, there is Swachh Bharat and digitalization. Anything from a market's perspective that stands out that you would think an investor can bet on? Any of these themes?
I think, Neeraj, while one can go into this specific, and each of these specific items have a huge opportunity to play out, frankly speaking. But I do believe that what this government has done in last 1 year is, bring the development agenda on the table. And I think the sense of urgency which is there in the bureaucracy and ministers to sort of, roll out the things, I think they mean business. I do believe that you will see impact of all these things panning out in, next 12 months a lot more prominently than it has been in the past, given the fact that they had to clean out a lot of things. Coming back to, I think, some of the structural things they have done, according to me, in my opinion, one thing they are attacking is the financial inclusion program. This, according to me, has a far-reaching and long-lasting impact, because I think we are bringing a parallel economy into the mainstream. We are bringing domestic savings which were otherwise going into physical assets and causing inflation for the productive use of the economy. This will start having a significant impact otherwise for the economy and banking and financial sector in particular. Secondly, I think, look at, I think, the some of the flagship programs like defense. It will release huge amount of order manufacturing setups in India. Obviously, given that sort of task at hand, it will take time. I think the meaningful impact of them will start getting felt only maybe 2 years down the line, because by the time you start a program in manufacturing, it takes a few years. But so you might not see anything meaningful immediately getting impacted at a wider scale. There are companies to play at a smaller but wider scale. I think defense will still take time. Railways could be, in my opinion, a very quick impact item, because that is where huge amount of spend will happen. Already we are seeing things are we are hearing talks about some orders getting released very soon. Roads and ports, I think you will see a very big impact. Today we see Mr. Gadkari's interview where he has said that he will release a lot of orders over next 6 months. So I think you will start seeing those kind of so investment cycle will start beginning, and some of these government-led in the infrastructure segment will be a big opportunity. We will see EPC companies doing very well, leverage to these segments I just spoke about. So I think overall things look very, very good. I do believe that while all of us in markets are impatient and we want things to see very quickly, but good part is that rather than taking a shorter term approach, they are taking more policy driven approach, more long lasting approach than a quick fix. Fiscal deficit today is a much more comfortable position. Right. There is no sort of big spend out happening at the cost of productivity. So all the things are, according to me, very, very positive for the markets. And we remain very, very positive on the government performance as well as growth in the times to come.
Let me give you the bad news. Earnings. And that one word, I guess, captures the real root reason why Indian markets could suffer in the short term. Because my sense is that P expansion is unlikely, and markets will not move up till the time earnings don't come back, and earnings will not come back for next 2 or 3 quarters.
So I don't completely disagree with you, and Nikunj, that's it's not a bad news. According to me, right now we are going through a consolidation. Earnings might take pick up, but the good part is that right now this view is consensus. Everybody is saying that don't ask for earnings next 6 months, which is good news. I think markets are consolidating. Good long-term investors will come. Short-term investors will probably go out, and I do believe that earnings will surprise earlier than markets expecting, because the consensus view has got built that earnings, we are not going to see any pickup in the earning over next 6 months, and which is likewise when high expectations got built last year. I think right now we are going through the period of adjustment of expectations, which in a way good from a medium term to long term perspective. Then the long term high quality investors will be able to come and buy in the market, and that's what I think one is looking for. So I am not very perturbed about let's say what can happen in next 2 quarters. And mind you, even the current earnings season, I don't think particularly it is very bad either. I think we have seen banking segment by and large reporting good numbers, except a few incidents in PSU here and there. We have seen by and large, I think numbers have been all right. I mean, we haven't seen any disastrous earning coming out. So I think it is more also a perception which has got created. Obviously, one would look for volume-led growth, which is more long-lasting, and which I think will be probably picking up little later, and hence this disappointment right now in the market. But I do see it as a readjustment of expectations.
Touch wood on that, Vikas. Good to chat with you as always. Thanks much for taking the time out.
Thank you for having me.
Okay, that's the view then from Vikas Khemani from Edelweiss. Let's just get you a status check on what the market is up to. Pretty much in line with what the Singapore Nifty was indicating earlier this morning.